good afternoon. I am joined today by Andrej Kirn, who is the head of international organizations and the humanitarian agenda at the World Economic Forum. And I'm particularly excited to have this conversation with him today on the topic of humanitarian investing. This is something which I think is incredibly interesting, extraordinarily timely, and seeks to find that very rare and interesting sweet spot between how we deploy capital to achieve essential humanitarian goals, but whether we can use this as an additional tool to both bring additional capital, but also perhaps more innovative forms of interventions into humanitarian settings. And of course, this topic has been incubated in a range of fora, not least the World Economic Forum, and Andrej has played a very important role in helping to kind of steer and convene that conversation prior to COVID. And it is even more relevant now post-COVID, and I really hesitate to use the word post as if we are post anything, but post it having happened, not post it having been behind us or the impact being behind us, far from it. So Andrej, first, welcome. It's lovely to see you. But secondly, would you just set out the work that you have been doing as part of this task force, and we can explore, prior to the pandemic, what it would do, and then how it might be conceived of differently post that.
Well, thank you so much, Paul, for having me. And indeed, it's we started this effort about 2 years ago, quite sort of experimenting in bringing together the various shifts that we started to see occurring both in the humanitarian development side as well as amongst the investor community. And in a way, I think the current situation adds even more urgency to accelerate those efforts, even if our job became probably even harder as part of that. The humanitarian investing really as a concept started in our discussions and collaboration with the Red Cross, with the World Bank, a number of different investors, and really the reason why the forum is involved and has been trying to push this agenda is because of our sort of nature working with these different stakeholders across the year and across some of these newer topics. And we define it very much as investments that measurably benefit people and communities living in fragility, but also create some form of financial return. And the reason why we're trying to push that as a concept is because we've seen how over the years the sort of traditional notions of humanitarian response being kind of a couple of months and then someone else takes over for the long run has just not been the case in practice. And you see the UN, you see the Red Cross, many other international NGOs, local NGOs operating in areas like Afghanistan, like the Democratic Republic of the Congo for 20, 30, 40 years. So this sort of notion of protracted crises have really shifted what does it mean to have humanitarian response on the short term, and what are some of these more long-term solutions that are both sustainable for the development community, for countries, for local markets, regional markets, and that's what we've been trying to focus. We've kind of assembled a very diverse and prominent high-level group, yourself included, because we've been really trying to make sure that we get these different perspectives, that this is not just about bringing I would say an investor perspective into the humanitarian space or vice versa, but trying to establish a middle ground where there's stronger collaboration, because we know that while humanitarian aid will always be needed, we're not saying that it needs to be replaced, but we need to find additional ways of mobilizing both partners but also capital for some of these longer term solutions. And I think the current situation will even show that sort of the growing bill of humanitarian activities just won't be able to be kept up within the traditional ways. And the way we've tried to approach this, we came out with a white paper last year that just sort of tried to frame this as a concept, but also wanted to introduce language that bridges these different stakeholders, but also some examples where we see that essentially sort of blended approaches have been utilized to bring in different types of investment capital. We are realistic that this probably means more public money to attract some private money in the early stages, but we're hoping that over time will be rebalanced. But what we also wanted to show through some of those examples, and kind of building on that, is the notion that you are able to work with different players and with different types of capital, but that requires a change in behavior, in your own structure, in culture, and so on. And you're only able to be part of that solution if you're part of that conversation from the start. And we've seen in many cases that, let's say, the private sector at large, companies, investors, others, foundations, very much came to some of these conversations too late in the game, and I think that's what we've been trying to rebalance. And kind of the two focus areas that we've been driving, and happy to go into some of the more details, is on the one hand really try to test through concrete projects how do we increase that flow of investment capital. Here we've been working with a number of these members within our high-level group around energy, agriculture, water infrastructure. The notion behind this is that until we have actual proofs of concept, and we have a few, but there's still a few overall, we're not going to be able to shift this at a large scale until we're able to demonstrate the value of doing this differently. On the other hand, we can have the best project in line, but if the right stakeholders aren't ready to actually or able to work together, we need to develop tools that equip and sort of expedite that collaboration between the humanitarian development actors, donors, and investors. And there we've been really looking at what we call organizational readiness. So how are organizations built and structured to actually be able to mobilize? Are they allowed to? Do they have the right skill sets? Another thing that we've been doing that we launched at Davos this year has been what we call an opportunity platform. So really, it's kind of an interactive web tool to show that there is a strong ecosystem out there. And it's a combination of humanitarian and development approaches, but it currently features just over 1,000 projects worth about $300 billion US. And we wanted to kind of show that there is some confidence in that space as well. So all of those things are essentially a number of different tracks that we've been building over the last 6 to 8 months. And I think all of them are even more relevant in the current situation.
So can you give us an example for those people who are kind of viewing this now of how humanitarian investing, sort of just a practical, for instance, of what an example of investing in a humanitarian context would be that is different from the delivery of humanitarian assistance in a more traditional, either philanthropic or bilateral or multilateral kind of donor context?
Yeah. So one of the examples where we've been working together with the Red Cross, and they've been really a pioneer in this space with their humanitarian impact bond that they launched a couple of years ago, which focused on building rehabilitation centers. Another one which they're developing essentially as part of their pipeline is around water infrastructure in Goma in DRC. And traditionally what you would see is essentially, donor funds or maybe government funds going into sustaining some form of local infrastructure, or essentially paying for services to truck water from one community to another. They've been doing this for 30 years. It's not cheap. It's not efficient. And they've been really keen and essentially been focused on working with some donors, including Sweden, working with, for example, Munich Re and Lombard Odier, on understanding what would be a different economic model that starts to blend some of these different forms of capital that actually invests on the long term in water infrastructure. Now, who owns that, whether it's community-based, whether it's the local government, that's all part of this process. But they're really trying to demonstrate that for, sort of a smaller component of donor capital, they are able to galvanize others for whom this over time will form some return as well.
And conceptually, because obviously I think the kind of skeptic / the cynic will say, how on earth do you seek to obtain investment level returns? I mean, even somewhat mitigated or ameliorated or sub-market or discounted returns, but some return other than just a donation in context where there's war, conflict, poverty, people are in the most difficult situations. How do you model out cash flows such that private capital can be deployed in a way that obtains returns? And obviously you've thought about this a great deal, but what's the kind of rejoinder to that concern?
There's a range in this, and of course, not only is there skepticism on let's say the private side of the level of returns, but I think there's also skepticism that we're trying to address on the humanitarian development side as to why this should even happen. And again, here we are very much guided by some of the key players that say, the models we have put in place for the last decades are not sufficient and they're not sustainable. Now, we are, again, realistic on that range of returns. And we are, even when this work started, very much focused primarily, let's say, first on let's say, different types of impact investing. So you have higher risk appetites, you have, of course, much more openness that balance of return and impact is more equal, and perhaps there's below market returns. But we are also looking at how this would play out in the long run. So the kind of examples, whether it's the ICRC one, another that I can give is we've been working with Cross Boundary, who set up an Africa Energy Access Fund, a 200 million fund on essentially investing in microgrids across sub-Saharan Africa. And they've essentially structured in allowing for 4 different types of capital, in effect to allow different types of investors to get different types of returns. What we've also done, and that was kind of the purpose of that opportunity platform, is that there will be different comfort levels. There will be those that may want to seek some participation in places like South Sudan, but there may be others that will be looking at, for example, I don't know, Egypt or Sweden, that is actually looking at how you support refugee entrepreneurship. And our purpose of that is to show that there's kind of a broader ecosystem that needs to interact. This is not just about going into the core conflict areas. There's a range of different interventions. So again, our starting point is very much to look at probably lower returns, but over time, and this is where we're working, for example, with the Gulf International Bank as one of the members of the high-level group on actually thinking through, well, what can we learn from the approaches that we're taking in the climate space around disclosures, around the need for data, and how could we apply that into this space as a way to start to over medium to long term mainstream amongst this within the investor community.
Is there I mean, obviously, if you think about humanitarian settings, what you're essentially trying to do is give people shelter, access to food and water, access to healthcare. Obviously, you're trying to shield people from conflict. So I guess, and you can, elaborate down, also people want to have the dignity of work and find ways of, getting recurring income streams and not being dependent on handouts and being entirely reliant on the generosity of others. But in each of those areas, I presume, and you began to articulate, here is a housing solution that is separate from the short-term imperative to put up tents. Here is a water solution, as you've alluded to, which may be a more durable and sustained way of actually both getting water to people in the short term, but creating a water infrastructure in the medium to long term. Here are energy solutions which can help provide people with lighting and refrigeration which are essential to their long-term, their medium-term well-being, both in educational and health terms. So what you're seeking to do is disaggregate what it is that people need, and then say, how do you find blended finance ways of delivering those assistance?
I think that's definitely part of it. I think there will be components where again, traditional response will be needed because of the urgency and sort of the gravity of let's say a new crisis. I think even there, and this is where we've seen, I think, some of the early days of public-private collaboration, whether it's Ericsson or MasterCard or DHL and UPS, essentially helping to improve that response, or even investments in improving the efficiency, for example, through digitalization, as the sector moves into cash payments. I think what we're trying to understand is where are there interventions that maybe even as part of that immediate response could already seed the foundations for a more sustainable future. And we organized a trip a couple of years ago with a number of kind of different members of our community in Jordan, and one of them was a visit to the Azraq refugee camp, and it came a day after the IKEA Foundation sponsored solar farm was opened. And this essentially is electrifying the refugee camp and doing so in a sustainable way. But the business model behind it was still a traditional grant. And I think it went through Germany. Now, what we are trying to understand is what would it take at the beginning of that for that to have a different business model, and what in effect would then be a changing role for a donor or for an agency like UNHCR who's mandated to run these camps.
I mean, I think one of the things that it's predicated on is this idea, perhaps, of, say, for example, refugees being helpless, passive victims who are incapable of doing anything. And in fact, some of the most resilient, entrepreneurial, remarkable people in the world live in refugee camps, and what they're able to do to sustain themselves and their families is nothing short of miraculous. And therefore, if you could find a model to be able to provide an infrastructure to people in those circumstances, the amount of economic activity and trading and productive work that happens in refugee camps. I mean, there's been a lot of work on coding, for example, from refugee camps. And again, I think sometimes it's useful to kind of offset people's stereotypes about what you can and can't do from a refugee camp and the skill base and the human capital levels of refugees. But if you found a way of delivering electricity and internet access to refugee camps, people could in fact undertake work and begin to derive digital payments, which would cause them to be happy to pay for bandwidth and access to the internet and indeed electricity. And that in fact might then open the pathway to some of this infrastructure being provided with associated revenue streams.
And it's such a critical point, Paul. And this is constantly reaffirmed by the likes of Peter Maurer, who's the president of the International Committee of the Red Cross. This notion that you have a presence over decades that actually sort of reaffirms dependence on the system needs to be challenged in a way that says, well, how do we build self-reliance and that independence? And I think what's interesting, if you take Jordan as an example, when the Syria conflict started, and of course Jordan had, as one of the neighboring countries, a big influx of refugees, there were a lot of different models and sort of interventions on how the international community supports that response. And a lot of it sort of boiled down quickly around work permits, who's benefiting from that economic opportunity from the host community versus the refugee community. And I think we also find ourselves at a time where kind of that future of work doesn't mean that refugees are isolated from some of those shifts. And you see opportunities of providing livelihoods through remote working or learning, as you say, new skills that actually help the humanitarian sector to whether analyze or support in one way or the other as part of that response.
So Simon Meldrum from the Red Cross Innovative Finance team, who will be familiar to you, is online and has talked about the application of insurance to humanitarian assistance. And you know, I know there's some work that's been done on the kind of thinking about insurance as a way of providing vital assistance in humanitarian settings, but also as part of this broader conversation. Are you up to speed on some of that thinking and work?
We haven't engaged in some areas. What is true is that a lot of the many of the successful I would say responses and models have been largely kind of in the natural disaster space. I think where it's been more difficult, but it doesn't mean it's not applicable, is of course when it comes to conflict settings. But again, I think it also points a little bit to our understanding of fragility, you know, and kind of our ways of seeing how some of these response structures, both in the humanitarian development side, have been siloed into humanitarian in terms of you know, response to a tsunami or to an earthquake, versus something like in Yemen or in Syria, where it's of course conflict driven. So we definitely see insurance as one of the components. I think what we've been trying to do with the initiative is to sort of lay out different modalities and different asset classes as well, to try and think through what are the options. Because in an interesting thing, you know, when the ICRC's Humanitarian Impact Bond, which is essentially an outcomes-based funding approach, a lot of the original discussions within that space focused on outcomes-based funding. And some of our earlier kind of workshops, we had investors and others that, you know, sort of responded and said, this is interesting, but it's too complicated, it's too niche, it's too small for us. And again, we didn't say that that's not important, but we said it's one of the potential areas of how you're responding. But in doing so, we need to look at essentially those different options. And that was actually one of the reasons why also kind of we felt the need of that white paper, to say, here's almost sort of an initial menu of potential options that you could be exploring.
We will get posted on chat all of Simon's very helpful links to some of the materials that the Red Cross and others have been working on. So thank you, Simon, and we'll cross-post those from the Q&A into the chat. So Andrej, I wanted to ask you where we sort of started, which is in what ways you think this work is now, you know, more relevant and could be applied in the, you know, post-corona world, as it were, and how you see your work streams changing from, you know, 6 months ago. It's amazing how much changes in world history over in 180 days.
Yeah, it's I think everyone's been reacting and adjusting to this, and as I mentioned at the beginning, in a way, the importance and the urgency to do this differently has increased. But I think what we may see is kind of at least in the initial stages, maybe a dip of appetite to actually do things in a different way. But I do think that at a time like this, we are faced with situations which shouldn't just mean let's pause, reassess, or react, but see where we can actually enact change as part of this process towards recovery. You know, the gravity of the situation was pretty large before COVID. If you look at some of the you know, facts, let's say the International Rescue Committee thinking that we may see between 500 million, even up to 1 billion cases globally. WFP is predicting potentially a doubling of the number of people that are facing starvation, and those are primary kind of impacts onto some of these settings. We can then also assume that the secondary impacts of the global recession will increase the number of people in poverty. We may see a decline of ODA levels. It could range, in development initiatives is predicting, but potentially over the next 2 years, between a drop in 10 to 25 billion. So I think it really reaffirms the argument and the need both for new partners and essentially a diversification. And I think, you know, it's been interesting to see how the system has so far responded through the traditional humanitarian appeals process. And as I mentioned earlier, that bill is going to get longer and longer. It started with 2 billion in end of March. Within a month and a half, it tripled, and that's just for the UN system. So I do think, the kind of areas of focus that we have initiated even before COVID, all of those are relevant. Energy as an enabler, new ways of growing food, for example, hydroponics is one example. Access to water and sanitation, all of those will remain critical. And all of those also link to how do we support, of course, healthcare systems. So we may see within the initiative, of course, a stronger focus on health. But if we will see kind of an uptake of investment into healthcare and health systems, that should be done in combination with some of the other parts of that broader ecosystem, whether it's energy and water and so on. And I think on the other hand, learning from how the international community yet again sort of mobilized in response of that, and understand what would be the options if you could look at a different pool of players and capital. I think again that issue will not disappear. What we may see is, of course, just that our timelines will realistically have to somewhat shift. But I foresee at least that within our community, that appetite to keep moving with some of those concrete projects is there. I think the really big question that we were trying to solve even before COVID, and we'll have to do it now, is really the issue of scale. How do you combine a set of smaller projects with something that is done at a much larger scale that is, of course, of interest and relevance, both to the development finance institutions and to investors?
I wonder if the pandemic has also changed the conversation. I wonder, based on your engagement with some of the very high-level people who are on this working group, particularly in multilateral finance institutions or senior people in government, whether 3 things make this more viable. The first is the sense of the humanitarian, a sense that we have witnessed these horrors of excess deaths, and that we have, it has instilled in us a greater capacity for empathy and generosity. Now, you can always say, a crisis can also make you scared, fearful, and less generous, but that creates a possibility. 2, a sense of interdependence, the sense that what happens in one part of the world is not confined to one part of the world, and that it is in our collective interest not just to do the right thing by people in extreme distress, but also there are reasons of enlightened self-interest to support and protect people who may be at risk. And then thirdly, this sort of strange thing of kind of deflationary environments and negative interest rates, where access to capital at historically low rates, dare I say it, even negative rates, creates an opportunity to enable a certain set of financing that was not previously available. And whether you think that those 3 factors are perhaps adding a little more impetus to this conversation.
No, certainly, and I would say, that kind of feeling of conflicts being far away and over the last couple of years coming closer and closer to our doorstep, that realization, whether we saw it, from sort of what was happening out of Syria and moving into Europe from the influx of migrants and refugees, I think that was already present. I think I have not yet seen kind of just because of the path of the pandemic, largely going through Europe and North America first after China. There's been such a focus on I would say investing and making sure you stabilize your own country and your own communities. I think what we're now seeing in Latin America, for example, what I think in the next 3 to 6 months we'll see in Sub-Saharan Africa. There were first COVID cases in Cox's Bazar in Bangladesh. The story is far from over. So I think if those three elements are coupled still with the attention span, that even if things are somewhat stable in our near surroundings, if we don't invest in stability almost as part of that kind of public good, if we don't do that now, then I think over time, the accumulation of other factors, including climate change, other types of pandemics will come back. So again, this kind of notion that you can just sort of split, that there are certain places that where even things are worse, but they will be contained. I think that is there. Part of that question will also be just in terms of priorities, in terms of what sectors are being invested in, and if there will be, because of the pandemic, kind of that immediate focus on vaccine development, healthcare systems. If that is not sustained, even in areas where even before COVID the health systems were fragile, then I think we are at a loss. So I think there's a realization within some, but I think in the first few months, it's not a distraction, but just an overwhelming part of that response of having to do that at your within your own country and cities has made it more difficult. So I think we do need to make sure that as things improve in certain areas, we don't forget that they are by far from stabilizing in many other parts of the world.
So, I mean, we're out of time, but give us a little bit of a sense of your next steps, because I think, people in the conduit community I am sure there are, literally hundreds and hundreds who would be very interested in following, your process. Give us the steps of, is there a culmination to a series of investable products? When do you think that the next version of the kind of research and the viability studies you're doing? I just think it's interesting to see what's coming up in your world.
Yeah, no, there's a number of things, and again, we don't envisage sort of a major pivot on the existing work. I think a lot of what we were doing is much of it is applicable even in the current situation. I think where we will need to double down on our efforts are these sort of concrete examples along those different industry tracks. What we want to make sure that we do is that, of course, we cannot just focus on a small project that the ICRC, however innovative and changing for their way of operating is. We need to couple that with multiple different initiatives that we're seeing, for example, in the hand washing, sanitation, water infrastructure space. So we will be looking, of course, to partner with others to create a much bigger kind of snowball effect, essentially, to show, yes, here's one example, but if that example is paired with others within the ecosystem, then you can reinforce those connections and aim towards scale. So the industry tracks is for sure one area that we will focus. What we're trying to do with that sort of interactive tool, which shows different investment opportunities, both, we essentially collated things that were completed, that are active, and that are as part of sort of kind of a design phase. We need to continue working on that, and the key part of that is really getting more data into that platform. One is, of course, having the projects. The other is better understanding the market opportunity, the risk factors. Who are you connecting with? So that's another component. And then the third one is really continuing to work with these various organizations to make sure that they are changing as part of this shift. We will see in the next couple of weeks a playbook coming out, which is something that has been led by the Swiss and the EU as part of what's called the Good Humanitarian Donorship Group. And we hope that playbook will actually give many organizations quite a detailed overview of the kind of steps that can be taken to better work with investors and others in order to mobilize some of this capital. So a lot of that ongoing work will continue. What I think part of the role of the group and the initiative at large is to keep beating that drum to say, do not forget about the most fragile, and how do we make sure that as we leverage existing frameworks like the Sustainable Development Goals, that those are extended all the way to the most fragiles. They're not just focused on, let's say, some of the more stable and middle income countries as focus markets. So I think that is kind of one thing that we hope within the group, that we'll keep focusing that attention. that until we solve the most fragile, we will see that gap of how we are able to achieve the goals towards 2030.
So, Andrej, I'm going to leave you with a note rather than a question, but one of our participants has asked, apart from institutional investors, how can humanitarian investment be brought and offered to ordinary citizens? And I think that's obviously a really important question, for which I think there are no immediate answers, but I think to put that onto your agenda and think about how you can broaden the ways in which a base of citizens can participate in this, I think would be both exciting from a kind of solidarity point of view, challenging from a finance point of view, but there must be some ways of thinking about this. Andrej, thank you very, very much for your time. We shall continue to follow with great interest the work that we collectively will do together, and as each product and innovation emerges, we'll bring it to the Conduit community, because I think it is certainly, for all the reasons you've outlined, more relevant now than it's ever been. And I think leveraging new forms of finance and new ways of thinking into this space is just an essential imperative. So thank you for your work.
Great. Thank you so much, Paul, and happy to share information with the Conduit community as well after.
Fantastic. All right, everybody, stay safe and stay well. Bye-bye.
Thank you.
Bye.